Today we are going to discuss about a very bullish strategy called covered stocks or covered calls. This is very popular and works fine when the stocks are going up. So the way it works is you basically buy the stock. Just for simplicity purpose, I said think about it like buying a home, and at the same time collect a down payment to sell at a higher price, which in the stock world is sell call against it, and keep collecting the down payments. So the way it works, I'm just going to show with an example of IWM, which is a mid-cap index. So I bought 100 stocks of IWM. Each stock cost me about $139.60, or a total of about $14,000, close to $14,000. And at the same time, when I bought for $139.60, I sold a call at the strike price of 141. Think of it as a down payment. So if the price goes to 141 or above, I will have to give my home, so sell my home for $141. So I calculated a rent of $138.25, and the stock price should be above $141 on 17th of March. I think at that time it was about 30 days away. So if it does not reach 141 or above, I keep the down payment amount, which is what calls I sold against. I followed it up on March 10th to roll from March to April, collected another $55, and then April to May $77, and May to June about $238. So between these $238 and another $135 here, I've collected close to about $400 in down payment, or you can call it as rent. I can keep doing this consistently till someday when IWM reaches above 141 or above on the day of expiration. This stock will get called away, and at that point of time the price of the stock that I bought was $139.60, and somebody is going to take it at $141, and still I keep all the down payment rent. So at $139.60, and someday, let's say in August or September, it reaches 141, this stock will be called away from me. Basically, the stock will be bought out from me for $141. So I make about $150 in this transaction on one contract, plus all the rent that I had collected, or the down payment I had collected, is for me. So just to show how it works, I close my March, open April, and then I close April, open May, then I close May, open June, so on and so forth, till someday my stock gets called away. I have had some of my friends who say that making $400 of a $14,000 investment in less than 4 months beats bank returns by a big margin. That is really a poor comparison. When you have a money in a bank account, checking or savings account, whatever, the principal is guaranteed. But think about it, be covered stock or any strategy generally involves a risk where, let us say the IWM example I was showing at $139, there is nothing that prevents it to go to $100, $50. So if it goes to $100, my $14,000 investment has become $10,000. Of course, I had collected all the rent. Let's say I had collected rent even like, let's say $1,000 or $2,000. Still, I have a substantial principal risk. So for those who think that wow, this could be a good money spinning opportunity, please understand that there is a substantial risk when this stock or the underlying that you are owning goes down. But again, that same rule can be applied with your home as well. Just because the price of your home goes down, you're not going to go and sell that right away. You might just want to keep it and keep collecting rent till the price reaches an optimal level where you can sell and get out safely for a profit. So now let us look at what type of stock is an ideal candidate for a covered stock. The example I used was IWM, and the total amount of money that I needed to start this trade was about $14,000. Yes, it made about $400 in less than 120 days, but how many have a $14,000 just to invest on one stock? Some of us may not have that capital to invest heavy. So for that, the ideal candidate would be a low price stock, something like a USO, which is oil stock, United States Oil Fund. It's just $10, $10.5 at the time of this video. So you're talking of 100 stocks is $1,000, which might be fairly reasonable amount to invest for most of us. And also, if that stock has a high implied volatility, which is the golden grail in any stock options trading, especially, you have collect higher premium or higher down payment. In this case, implied volatility is about 30.39%, which is a fairly high implied volatility. Also, if that stock is fairly oversold, in this example, the 200-day moving average is here. It's fairly oversold and is trying to recover. That type of stock is a much better candidate. So a stock that is trying to recover, a low price stock and with a high IV, is a dream candidate for being a covered stock. Let me show you how to create a covered stock. It's very simple. Just type in the underlying. I'll go to 21st July and see what is my premium. So as I said, anything less than 50 delta, it's 43 delta, is about 32 cents on 10.5. So let me choose 10.5 as the strike price. Buy a covered stock. So if you notice it, the cost basis for me is only $9.93. So which is less than $1,000. Confirm and send. And that would conclude the way to create a covered stock. Happy and safe trading, my friend.